welcome to Next Gen Finance, an SEB podcast about sustainable finance. My name is Lina Apsheva, and today I am happy to welcome you to our 2025 year-end episode, where we will reflect on how sustainable finance has evolved over the past year and share some perspectives on what may lie ahead as we move into 2026. To do so, we will hear from a lineup of experts in different areas of sustainable finance who will provide us with their insights and forecasts. Among the experts we will hear from today are Karl Oskar Olming, the Head of Sustainability Strategy and Policy at SEB, Elisabet Jamal Bergström, Head of Sustainability and Communication at SEB Asset Management, Nathalie Egenaes, the Head of Sustainability at Business and Retail Banking at SEB, and Fredrik von Platen, a Sustainable Finance Specialist at SEB Debt Capital Markets. And now we have Elisabet Jamal Bergström with us in the studio, who is the Head of Sustainability and Communication at SEB Asset Management, SEB's fund company. So, Elisabet, thank you so much for joining me in the studio and taking the time during this busy holiday season.
Thanks for having me.
I'm wondering, what could you tell us about what happened in asset management in 2025?
I thought back about 2025, and it's an extremely eventful year, right? A lot of challenges in asset management and in sustainable investments. But maybe I can start with some positive news. When we talk to our clients, and by clients I mean private individuals as well as institutional investors, we really see that their interest for sustainability and sustainable investments has not decreased. And that might be a bit contrary to what you hear in the sort of everyday debate about sustainability, sustainable finance, sustainable investments. Our private savers, they still consider sustainability to be as important as last year. Their focus has shifted a bit. When we ask them which are the most important topics, climate change is always and has always been the most important one. Clean water is also constantly up there, top 3. But we can see that they are actually more and more focused on social issues and social sustainability goals. So I think that's quite an interesting shift. And then, our institutional clients are also still very interested in climate, still very, very interested in sustainable investments. But you see this shift in the interest towards social as well. In terms of challenges, 2025 was also a year when the ESG backlash gained even more momentum. We've seen it for a few years, especially in the US. And of course, now we also see that this backlash is supported from sort of federal level. And there are various changes regarding what companies can say about diversity, inclusion, but also, climate change. So this is challenging for us as investors because these are some of the topics that we like to talk to the companies that we invest in about. And we can clearly see that there is less opportunity to talk about these issues now. And I think, it's been a challenging year for international collaboration on sustainability as well. And this is also a tool that we use quite a lot. We like to work together with other investors in order to influence companies and have a dialogue with them. Many American actors and players have exited these net zero alliances that were formed a few years back in the financial industry. And some of them have even ceased to exist, like the Net Zero Banking Alliance. And I think, this difficulty for international collaboration, you can also see it in meetings like the COP30, where there was not much progress. But also, I think the format in itself was questioned much more than it has been before. So this has been an issue and a challenge for us, of course. 2025 was also the year when defense investments became sustainable. We've seen quite a lot of guidance from the European Commission and the European Union on how to view defense investments and clearly stating that there is no conflict between such investments and different regulations on sustainable finance and sustainable investment. So that's a big event, I think, for the investment community during 2025. And then speaking about the EU, of course, this has been the year when all the sustainability reporting and disclosure regulations have been up in the air. We do have some proposals for new ones, but this goes for the CSRD, the Corporate Reporting Directive, but also for the Sustainable Finance Disclosure Regulation that we are very much affected by. That's also a big happening, I would think, for the investment industry.
And then I'm wondering, we're very soon in 2026. So what are your expectations for the coming year?
I think there are some trends that we see already and that have been here for a while that will continue and that will affect the way we view investments. And one of the most important trends, I think, is geopolitical insecurity. This puts so much more attention on national resilience. And so this will affect the way we view investments, but there is more spending on not only on defense, but also on infrastructure, on electricity grids, and things like that. And I think that this will, of course, continue going forward as a really long-term trend. I think it could also possibly put the finger on resource efficiency and in that sense also circularity, because that, of course, is a very interesting investment theme that I think will be affected by this whole development. And then when it comes to climate, I mean, this has been a focus area for all of us for a long time. In 2025, we did see a lot of effects, real effects of climate change. And I think it is top of mind of many investors that we're actually already seeing the effect. So we cannot only invest in climate mitigation, we have to look at climate adaptation as well, sadly, but truly. So I think this is a trend that we will also see in investing going forward. And then, as I mentioned earlier, social issues are on the rise. And I think, of course, this is because of international conflicts, because of social unrest that we are seeing in our home markets as well. And there's a new security order. It's international and it is domestic. So, focusing on human rights due diligence, but also themes like good education, equality. I think it will not go away. I think it's something that we have to consider more and more. And I think that those will be, trends for 2026 as well.
But it sounds like we'll have a lot to talk about in 2026, Elisabet. So thank you so much for joining us today for this short overview. And I guess we'll hear from you again in 2026.
Thank you.
And now we have Karl Oskar Olming joining me here in the studio. And Karl Oskar, you are the head of sustainability strategy and policy here at SEB. And for a couple of years in a row, you've provided us with updates about the regulatory space in the EU in this year-end podcast episode. But actually, before we jump into regulation, I was wondering, what is your view on what's happened in the whole banking sector in terms of sustainability in 2025? And I'm, of course, thinking specifically about the Net Zero Banking Alliance, for example. What are your reflections on this past year?
Well, I think that it started off pretty bad, and I think it was a result of the elections in the US and American banks being afraid of how to manage their relationship with both administration and different states and so on. So they all left the Net Zero Banking Alliance, and that created a response from the alliance to kind of lower some of the hurdles in the alliance. But the American banks leaving started actually also a European kind of exodus in the UK, and then once also UBS on the European mainland left. So when UBS left, I think the Net Zero Banking Alliance realized that they needed to act more preventive, and they decided together with the members in the alliance to basically phase out the alliance, but instead create a framework with guiding principles and so on that will live on. And I think it's sad that the alliance is not here anymore, but at the same time, the purpose of the alliance has really been achieved in terms of making banks set targets in line with the Paris Agreement in different sectors. And my experience is that that is not being compromised with in the among the European banks. So very turbulent year, but from the European banks, they are still kind of having the same direction and course. Yeah.
And I imagine that one of the reasons why the European banks are staying the course when it comes to setting targets and reporting on them is, of course, the regulatory environment in Europe. So why don't we jump right into that topic, and what have we seen in 2025 in terms of the sustainability regulation?
I think 2024 was kind of creating the preconditions for the perfect storm from a regulatory perspective. We had the Draghi report in 2024 on the competitiveness of Europe, which made a lot of countries or everybody scared. And then we had the European Parliament elections that move in the more right-wing direction. We had Trump winning in the US, changing the US foreign policy, which had an implications on European security, but also starting to attack European regulations as a threat to American companies. And then on top of that, we had political turmoil in Germany and France. And I think this was the perfect mix for what we then saw in 2025. And I think the omnibus package kind of was the starting point for this, for I would say an unprecedented mix of delaying, deleting, and deregulating, not only in the sustainable finance space, but of course the omnibus has been a hotly debated area. And first, the Commission went for the CSRD, saying that let's reduce the scope with 90%, and then the Parliament went on to say let's reduce it even further. Now I think they are, when we are recording this, they are about to reach an agreement which is similar to what they agreed on in the beginning of the year. So I think omnibus is really has created a lot of uncertainty for companies, and I think omnibus is in a way showing, in my view, some of the worst effects when you let politicians do the policy making themselves. While when we look at other parts that have come out this year on regulations, such as the taxonomy, the delegated act on taxonomy, where they are really doing real simplifications, and also the ESRS proposal, where they let technical experts work on it, and that was real simplifications. And I think that is, when things are being done well in Brussels, I think they are actually achieving the targets. I think when it's too much of negotiations and kind of closed door things, then we just get uncertainty, but we don't really get something that is positive for the European businesses. So I think overall a lot of uncertainty on this, but I think we are now, when we are getting a new ESRS proposal from EFRAG to the Commission, seeing a lot of the positive areas, such as that the DMA is much more top down, that it's much more coming back to what is a fair presentation, and you have to report if it's really in relation to costs and and effort and so on.
And DMA is double materiality assessment.
Yes, exactly. So that was maybe one part. Another part that happened this year, which has been much more well managed, I would say, is the SFDR. SFDR, the Sustainable Finance Disclosure Regulation that came out many years ago, has been heavily criticized, rightly so. It came out maybe too early in relation to other regulations, so those who had to apply it didn't have the information. Now they have done quite a good work in consulting both with authorities and with the financial market on this, and I think what they came out with now just a few weeks ago is pretty balanced, and I think the reactions in the market has been pretty positive. Now they have very flexible regime to a more prescriptive product categorization regime with a transition category and ESG basics category and a sustainable category. So now it is much clearer, both to the consumers and those who create these products, to know what can I put in and what can I not put in there.
And I should mention that you and your colleague Alva Jonevret usually write really useful updates on these regulations that we usually publish on sebgroup.com. So if anyone is interested in staying up to date on these, then definitely worth keeping an eye out. But yeah, some positives and some negatives, I guess, Karl, Oskar. And then if we look into 2026, what are your expectations for this coming year?
Well, on the regulatory side, I think we will kind of calm down a little bit in terms of now the omnibus package seems to be taken, and that means that we are going into more predictable regulatory developments. So the finalization of the SFDR, for example, is next year. We will get some more taxonomy activities in a new delegated act, and if we are lucky, I would say, we get a revision of the do no significant harm. Maybe not next year, maybe it's another year, but at least it's something that the Commission has announced. And we will get the revised ESRS from the Commission as well. What is now on the table came from EFRAG. So I think these will be real simplifications. It will take time to kind of work them in, but they will create the predictability that we so dearly need.
And if anyone might not know, the ESRS stands for European Sustainability Reporting Standard, and EFRAG is the European Financial Reporting Advisory Group, which is the independent European body that shapes financial and sustainability reporting in the EU.
A main issue going forward next year, if you look at these different regulations, is that what is apparent is that we are moving more towards the issue of transition plans, credible transition plans, and so on, rather than trying to label everything green. We are maybe more now in a how are we moving, and I think that is important. I also think that to some extent, we're seeing how real economy policies are become catching up a little bit. So we are seeing policies on, transmission and distribution, how to make sure that the European grid can support more renewables and charging and so on. I think that now we're coming to the point where interventions are more fact-based and in relation to what is really needed to fix the problems, and I think that's very welcome.
Great. Thank you so much for the update, and I'm sure that we'll hear more from you in the coming year.
Thank you.
And now we have Nathalie Egenaes, who's the head of sustainability for our business and retail banking segment. Welcome to the studio, Nathalie. Thank you so much for joining us.
Thank you for having me. I'm happy to be back.
Nathalie, so last year you gave us an update for the previous year for BRB, and I'm wondering what's happened since then. Please tell us.
So yeah, looking back at this year, 2025, I describe this year as the year that we took sustainable finance and tried to implement it more into practical settings. So while we're navigating and waiting for different type of regulatory updates, we've also tried to understand how we can create customer value at the same time. And it's been a lot of focus into turning sustainable finance into something more tangible, becoming more data-driven, and really making it more relevant for each individual customer. And there's two parts that I'd like to talk about. One is sustainable investments, which has been a major area that currently is undergoing a lot of regulatory updates and changes. And this includes everything from how products are classified, how they're going to be communicated. And this requires us to navigate very carefully how we want to continue delivering customer value. So something that's been very important for us this year is to see how we can move beyond just the regulatory. And one example of that is what we're offering our private wealth customers. So this year we've developed a more advanced portfolio analysis tool that really looks at several perspectives of sustainability beyond just what customer sustainability values and preferences are in their investment portfolio, and more to include what risks and how resilient their portfolio is to sustainability changes and different risks like physical risk, for example. So now we're using data to show customers both how their portfolio aligns to their values, but also how it's more resilient and resistant to different risks, which creates a better foundation for the advice we're providing these customers. Another area that I want to bring up, I talked a little bit about it last year, but it continues to be important and in focus. It's the energy transition in our real estate portfolio with another directive also coming up here, changes happening in 2026. And last year, we developed our offering by creating partnerships with energy consultants that could help our corporate customers get better guidance on technical related investments that they should perform. And this year, during 2025, we actually added a partner on the private client side. And we did this through a collaboration with a company called Quantum. Quantum is a Swedish clean tech company, and they specialize in smart heat pump systems for homes and properties. And what we did with them is that we had a pilot project in Vellinge, an area in the south of Sweden, where a lot of the households are connected to a gas grid and then are reliant on gas heating. So what we focused on in this pilot was to reach out proactively to a lot of these customers and together with Quantum guide them on what kind of solutions they could change to that are more sustainable in terms of their heating pumps. And this was, of course, also complemented with better financing terms from our side. So that was a great example of how we could help customers both in their economy and at the same time find a more sustainable option with a better climate impact. So those are two aspects that have been on the agenda for a while, even in 2024, and were continually important during 2025. But another part that we maybe haven't talked as much about is more on the social sustainability area. We also launched a product that was related to pensions and more specifically equal pensions. And this is something that is important but often overlooked, that a lot of our households have inequality in their pension savings. So what we know is that when one partner in a family takes more parental leave or they stay home more with their kids, that also in the long term impacts their pension savings. So what we created was a saving solutions that essentially compensates for the lost pension contributions when you stay at home. And this is the final step or product that is offered after an individual is provided with financial advisory regarding their pension savings. And it's also a complement to already existing tools where a client themselves can go in self-service and calculate what the cost is of them staying home or working part-time. So those are some developments in terms of products and offerings. But there's also another aspect that, as well on the social side, an initiative that I'd like to bring up that was important this year. And it is our participation in the Swedish Hockey League's initiative, which essentially is an idea that SHL, the hockey league, has developed to use their hockey team's strong local presence across 14 different locations to gather businesses, the public sector, academia, and then together try to address different challenges, societal challenges that are present in their local environments. And this can range from everything regarding kids' mental health to how they can become more physically active. And SEB has been a long-term partner to SHL, so we've participated in this initiative by actually contributing with our perspective from a financial player and how we can support the transition by providing banking services and products that help entrepreneurs and innovation to develop and create solutions to these societal issues.
Thank you for summarizing some of the trends that we've seen in 2025. And now I'm wondering about 2026. What are your expectations and forecasts for the coming year?
A lot of it has to do with the development in the regulatory environment. We are expecting changes in the investment side. We're expecting changes in the real estate area, which is a very important large customer segment in our portfolio. And depending on how these regulations develop, it will be important for us to ensure that we can provide our customers with the best offerings and ensure that they meet these requirements that are coming ahead. So it will be important for us to stay up to date with that and make sure that we're constantly producing and developing our offering in the most customer value way possible. Another area that's maybe not as regulatory specific, but also maybe related, is the agriculture sector. I think this is an opportunity where a lot of banks have clients. A lot of banks in Sweden have clients, but we haven't really seen that many of the financial actors actually strengthen their sustainability offering yet. And I think this is an untapped opportunity where we could see different opportunities that range from how Sweden wants to become more self-sufficient to the fact that the agriculture sector and even forestry can be used to produce renewable energy. And there's also the questions about biodiversity, of course. So I think this is an area where there's a lot of data that could be used in a better way, and there's a lot of opportunities that we could create offerings and help our customers produce new solutions and find new value streams for themselves. So I think this is an area to look closer into next year. And I was going into a bit of the social aspect, and the financial inclusion is something that I think could be interesting for us to look further into this year. I think it's something that's important for a retail bank to consider, and how we could, as a bank that prioritizes entrepreneurship and has been doing that for 170 years, it would be great to see how we could meet the needs of unserved groups such as female entrepreneurs that currently don't receive as much financing as their male counterparts. So I think that could be a very interesting area that would bring a lot of potential for us to look into during 2026.
Building on the 170-year plus legacy. Sounds exciting. Thank you so much, Nathalie.
Thank you.
Now we have Fredrik von Platen, a sustainable finance specialist from SEB Debt Capital Markets here in the studio. Hi, Fredrik. Welcome back to the podcast.
Thanks a lot.
And Fredrik, why don't you tell us a little bit about how the sustainable finance market has developed in 2025? You know, as someone who works with bonds all the time, I can't think of a better person to ask this question to.
I mean, it's been a very interesting year, I must say. Geopolitical discussions about, how relevant is sustainable finance and so forth. But I mean, we need to look at the numbers, right? And doing that, I can only say that we see an increase in numbers for this year as well. It might not be as dramatic as we've seen in the past, but at least there's an increase in the market, and that's I guess that one of your questions might be also for what's the outlook and what's to come for next year, and that's what we can think of for next year as well. We anticipate that there's going to be a growth in the market for next year as well. When we are in dialogues with investors, it's quite clear that they have this commitment towards sustainability. It's still there. I think it's also there for investors in the US, but maybe it's difficult for an issuer in US to put a label on a transaction. But I mean, it's quite clear, both in terms of numbers and also what we hear from investors.
All right. And, you mentioned the outlook for 2026, and that's exciting. But before...
Couldn't help myself.
Before we get into that, I love, practical examples, so to speak. And I'm wondering, were there any specific transactions that you advised on in 2025 that stood out to you that you would like to tell us about?
Yeah, I would like to highlight two things. And first of all, we have been in a collaboration with Traton. And we supported them on their inaugural framework. So it's
and then there's the parent company of Scania,
MAN, and so forth. That's correct. Thank you. But we supported them on the development of a framework, and it's been a really interesting project. And one of the questions that came up in this work, are they late to the party? We've seen quite a few to jump on the train and do a green bond already. But in this sector, you may say that they're earlier on. Because sure, they're ready. They've done their investments. They can deliver on BEVs. But there are still challenges in the sector. And sales is not picking up as we expected maybe a few years ago. So actually, I think that they're early, you could say, and then the growth numbers in terms of, volumes is still to come, right? So that is one of the interesting projects that we've been engaged in for this year. And then, if I should add one thing, maybe I'll speak about SSAB a little bit, because I also think that it's relates to some of the trends that we're seeing this year. I will come to it later as well, but sort of impact. Green bonds and green bonds that are able to deliver impactful emission reduction and so forth is something that we feel and see that investors are interested in. Their path that they are on with investments will lead to significant CO2 reductions in Sweden, in Nordic countries. So that's a really interesting project. We supported them on a framework, was it last year or so, but they did the first transaction under the framework this year. So I think that is something that stands out.
Interesting. And you got into the trend topic a little bit. What other trends have you been seeing this year?
We concluded on that, and I would say that there are 6 trends, actually. I'm not sure if you have the time to listen to them all, and maybe I'll need to be brief. But it's clearly about climate transition, right? And we are part of ICMA and Executive Committee of the Principles. And for the last year, we have been developing a guideline for climate transition bonds. It was released during the annual conference in Tokyo early November. And we foresee this to be relevant, in emerging markets, but also in the Asian space or Asian markets. Green bonds might not, work everywhere, and there's a need for this sort of labeling to come to the market as well. It's clearly a trend for 2026 and onwards. And if I may sort of jump to the next one, I would say that there's a even more sort of in-depth or increased focus on measurable impact. Yeah, I already mentioned that in relation to SSAB transaction. It is, clearly an advantage for issues that can profile and talk about the impact that they're delivering. And please remember that, sort of a label bond or a green bond is the only instrument where an investor can get this sort of additional impact. And that is something that is going to be even more relevant in discussions with, that we have with both issuers and investors. So it's a trend and something that we will sort of emphasize our work on for the year to come. The third one being sort of, Europeans' gold standard in green bonds. The standard was released late 2024, and this year we have seen sort of the first transactions to come to the market. Of course, we will see that label being adapted by more in the market or more issuers in the market. Right now, it's basically sort of in the utility space where you see issuers using this type of a label. But that's a little bit of an interesting trend for the year to come. Adaptation and resilience are themes and topics that we discuss, where you see sort of a shift in the nature or where we are already being affected by climate change. You need to deal with that somehow. And if you have the possibility to finance that, there's clearly an interest in that. It's been on the radar for quite some time, but it's been difficult for issues to find sort of the actual investments. But now, sadly, I think we will see them come to the market. Another theme that goes a little bit hand in hand, you could say, we call it sort of data, is given sort of the change in regulation. We don't see sort of the implementation of regulation as we expected, and for that reason we think that sort of ESG ratings might pick up. The information from these agencies are going to be more and more relevant. Maybe it's so that they sure will not report as we thought they would, or to the same extent. So for that reason, we foresee a sort of an increased demand from ESG data from these type of agencies, and something that we will spend time on. And lastly then, it is not maybe within the sustainable finance universe, but it's around security and defense. And why do I bring it up in relation to this type of a topic? Well, it's both sort of the problem and the solution, you could argue, because maybe some of these issues have been sort of excluded based on ESG or sustainability aspects, and that being the problem for some of the issues in the market. And the solution is that we are sort of copying the concept of a label bond or use a proceed concept into this environment as well. And we've actually seen both sort of Nasdaq here in Stockholm, but Euronext to come out with sort of structures and a method of how to do a defense bond. And some have actually both issued, but maybe also presented their ideas around that. So I think it's a theme for the next year, and I expect sort of we will see more on that topic. It's not maybe totally relatable to sustainable finance, but somehow it is as well.
Still quite interesting that there are a few connections there between what you're saying and also what Elisabet Bergström from SEB Asset Management said. She also mentioned defense and adaptation, for example. So certainly food for thought when it comes to trends. Sounds like we should have you back on the podcast, Fredrik, as there's a lot to talk about. But for now, I guess I'll just have to say thank you for taking your time to join me on the podcast. Thanks to all of our guests for joining me today for this special year-end episode. And thanks, as always, to you, our listeners. Whether you have been listening during the whole year or if this is the first episode you're ever tuning into, you're very welcome. If you like the podcast, please feel free to leave a review and make sure to subscribe or add the podcast to your favorites, depending on which app you're listening to us on. That way, you'll make sure to stay updated when new episodes come out. But that was it for today and for this year. Thank you again for tuning in, and I'm wishing you very happy holidays ahead. Take care and goodbye.